A mortgage holiday disaster. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Yahoo Finance discussing a potential for a mortgage holiday disaster. Now they're warning Australians to avoid it. Let's have a look at what they're saying here because we're getting a lot of mixed messages. Some people are saying properties are up on the rise. And we're hearing investment property in Sydney is down 15% as people try to sell. Rent is falling in some cities. Other cities it's going up. Once again, it looks like location is at play. Or maybe we're just seeing the more vulnerable parts of the market start to feel the impact of this hit faster than others. You've got to think about it. You've got one portion of the economy that dries up and their property prices in the more affluent suburbs get lifted, and then that flows through to the rest. Where do you think the anchor is going to start falling? Maybe the people on the periphery that have pushed themselves a little bit to the edge. Or those people that are taking one after another investment property, negative gearing them to the moon, and then paying interest only. And there's been concerns and warnings about this mortgage cliff. I've mentioned it on my channel. We've got all this fiscal stimulus coming from the government that's propping up the economy. And concerns of what will happen when people start to be forced to sell. Now the banks aren't doing this. They aren't giving these holidays out of the goodness of their own heart. They're doing this to protect their assets, which are our houses that are pretty much propping up a big chunk of their sector. Now, what we're going to see, and I'd bet a carton on it, that they will try and decant out of all of the bad loans over time, or at least slowly drag it out so they're not going to flood the property sector. Sure, some of the banks, and we'll look at that in another video, their profits are down, but they're still in profit. So maybe they won't be the poster boys of dividends for life. But what do you reckon? Do you think we'll start to see that? Because remember when there was this concern of so many people, 5-year interest only, there was a big chunk of them that were about to have to refinance. And then all these changes coming into place, forcing people onto paying, interest and principal. And we had articles there about these people on ABC who were complaining that now they had to pay the principal and the interest. And, we wept for them. And, well, that really hasn't materialized into big shifts in the sector, has it? So do you think this will? Do you think the mortgage cliff or the mortgage holiday cliff will amount to that? Will it be enough of enough of an increase in supply to the market to have a negative consequences on price? That's the question we need to ask and to keep in mind. So, and what could the banks do and what could the governments do to mitigate that if they are, anticipating it? Because come on, guys, it's 2020. Nothing is beyond reason anymore, is it? Sadly. So, with mortgage repayment holidays and government stimulus payments set to wind back, mortgagors who had arranged payment deferrals and are now unable to restart repayments may find themselves facing a financial crisis. An open letter of communication with your lender is crucial to show you are willing to work with them, along with a strong understanding of your rights. Lenders won't foreclose on a mortgage as long as they are trying to work through the situation with them. Well, yeah, because that's costly. That's costly. It's often not worth it. It's a pain for the banks to do. And then they're stuck with the property. They'd rather keep you in there and just drag you out longer till you get back on your feet. It makes more sense. Because we don't have... Well, in the US, some cities, some parts of the country, they can just send the jingle mail, get the keys, put it in the envelope, send it back, walk away. The lengthy process of a property repossession to recoup the funds, which most of the time is for a lesser amount, is the last step a lender will want to take. Knowing this will put you in a better position. Many lenders will want to cut a deal with you, such as reworking the terms of the loan, temporarily reducing the interest rate or repayments, or, as last resort, allowing you to sell the property for them. So here's what you can do. There are several tactics you can use to negotiate a reduction in repayment or get out of their mortgage with as little fallout as possible. I've outlined the options available to you if your repayment holiday has ended and you're struggling to restart. 1. Propose a temporary repayment plan. A repayment plan will allow you to make smaller, regular repayments until your temporary hardship period eases. The catch is, once you return to normal repayments, your lender will want to negotiate higher repayments to cover the period where you paid less. The key is to go to your lender with a realistic repayment plan that you know you can stick to. For instance, if your household is on a single salary temporarily, demonstrate to your lender that once you find work, 2 salaries will be able to fix up all arrears within a short time. Request a mortgage modification. If your income is reduced for an indefinite period, you could negotiate modifications to your loan with your lender. You could either extend the term of the loan to reduce the size of each repayment or switch to an interest-only loan. And we'll have to see. We'll see if those start appearing more and more. A little-known secret is that occasionally banks are also known to temporarily reduce mortgage interest rates, particularly if the only other option is foreclosure. So seek forbearance. This is an application for mortgagors who cannot make loan repayments in the short term but are expecting a lump sum payment that will cover repayments in arrears. Forbearance is where the lender agrees to forego loan repayments for a while and will accept the lump sum down the track. It could be money coming from an insurance claim, redundancy package, or sale of another property. Ask for a short sale. This prevents the bank from repossessing a property. This is where the lender allows you to put the property on the market yourself, then present all purchase offers to them. They choose the offer that they will accept as the final settlement of your outstanding debt. The negotiation process for a short sale is very delicate and nuanced. But remember, there are some powerful consumer protection laws on your side. Cooperate with repossession. Having a lender repossess your property is always a last resort for them and should be a last resort for you. A lender would like to avoid going to court and get orders for repossession of your home and a judgment against you for the value of your loan. As a borrower, you will also want to avoid incurring all of the legal costs. Rather than wait for court order, you could proactively approach your lender and request that you be involved with the sale. Your assistance with the sale will go on record and is likely to soften the blow to your credit rating. That'd be pretty bloody hard to do. That would be pretty damn hard to do. I don't. Could you do it? Maybe I'm just too passionate a person. I couldn't swallow my pride. It'd be tough. Buy your property after repossession. If your circumstances change when the dust settles after repossession, you may be able to repurchase the property from your lender at the auction or after the sale. While these cases are complex, nothing is impossible. Seek hardship relief. Lenders are obliged by law and their own code of practice to help you in times of difficulty if you have reasonable cause to request financial hardship. Keep in mind, most lenders also have hardship officers who can review your situation and determine what assistance they can offer you. While the end of the mortgage repayment holiday will overwhelm and bring additional added uncertainty to many households, it is not the be-all and end-all. Consider implementing a few of these tactics to better manage your mortgage repayments, reduce your loan, or potentially eliminate it completely. And this is DG Institute CEO and founder Dominique Grube-Ise, a lawyer, debit manager specialist, and wealth management educator. So, I mean, the one good takeaway from this article, and obviously it's a educational, slightly advertorial piece, one would say, but is to not put your head in the sand, is to not ignore reality that is rushing at you if you're on the brink of going under, and is to find a solution on the table. What do you think, everyone? Have you been in a similar situation? When we had it really tough, we cut to the bone a lot, really cut our cash flow and expenses down so far. I think we even had one car that we kept, but I just didn't pay for the registration of it for about a year, just to save that costs. So we only used another. And then actually we didn't pay for the registration for that one, and then we just called public transport for 6 months. So you've got to, it saved us money. You got to do what you got to do. And this is with 4 kids going around the place. Yeah, such is life. But, what are your stories? What have you done when times have got tough, particularly to save money? Or how to, things that you thought were a necessity maybe weren't. At the very least, some very good advice to get people to not ignore reality that is approaching them, and at least to plan and find a strategy to get out of it. But I don't know if I could just cooperate with the repossession. What about you? Let me know your thoughts and opinions in the comments down below, guys. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time.